Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about how we're up over $6,000, which sounds crazy, in the matter of a month from swing trading stocks. We're going to be talking about our entry points, our exits, and pretty much the positions that we're holding and my approach and strategy behind it. So, I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading and how I swing trade, how I find opportunity, how I find stocks, check out our school. It's awesome. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years of swing trading. And you guys can use code BEGINNER to get 50% off. We're only going to use that code for 10 spots. 10 spots left for that code. So use it, sign up. I'll see you guys in there. And this is going to be the only code out there. So if you want to learn more, use code BEGINNER. All right, now guys, let's jump into this here. So a lot of people will see me go, okay, Carter, I made $1 this past month, this past week from swing trading. I'm not successful. I'm bad. I'm terrible. Well, here's the thing. The second you have, a profitable swing trading strategy, whether it's $1 a day, whether it's $1 a week, you are profitable. You are in that 15% of traders, because 85% of traders fail. So, one of the things that I think is important is to have realistic expectations. A lot of people, like I said, see they only made $1 or $2 or $20, $30, and they go, I can never be a successful swing trader. Yes, you can. The second you have a profitable strategy, the only thing that's stopping you from making more money isn't your strategy, it's just your account size. And the great thing about swing trading is the profits you make today can be used as leverage tomorrow. So it has exponential growth. So make sure you guys just stay with it, continue your risk management tools, risk management skills, and let's actually turn to the computer and see some of the positions that we're holding. So, all right, so this is our monthly overview here with our digital trading journal. You guys can see our trade performance is actually really, really good. We have an 85% success rate, which is awesome. That is exactly what we want to see. Our average time in trades is about 2 days and 6 hours, which honestly, normally with my swing trades, it ranges from, 6 to 9 days. So, one of the things that I think is important is to always go back and review these trades so you can see what to improve on, what to, what's working in the market, what's not working. So you guys can see here that the best approach here is going to be the breakout strategy. The breakout strategy has worked very well, followed by moving average line and sell off. Our one loss here this past month was on a trade, and this was let's see here, a moving average strategy on SCI. So one of the things that I do think is important is to review these trades and figure out what went wrong. So, SCI, as we pull it up, we can actually see, like, did this stock ever rebound? And more importantly, we can go back in and see our entry point, right? SCI entry point at about $77. So right in this range, 200-day moving average play. I'm sure we could have made money off this if we would have kind of waited. And the approach that I had was very simple. Looking at this, we had a great upward trend, sold off and hit that 200-day moving average line several times. We took a trade on it on, the hourly time frame because it found some support here. We're hoping to get in preparation of that 200-day breakout. And obviously, I think that this is what went wrong is we didn't wait for that, right? You guys will notice that the stock never broke out above it. Even up in here where we had more sell-off, we didn't get a full hourly candle to close above that moving average line. And so now as we look at it, yes, there's still potential. Yes, there's this, there's that, and I'm sure we could get a breakout off this. But I think what I did wrong is not being prepared. I think I jumped the gun too early. And yeah, I know I tried to get in at a cheaper price, but if I would have waited for confirmation or just threw an alert above this, I think it would have paid off a lot more because I would have seen the sell-off, then I would have established that trend going down, and then possibly waited for a breakout or some sort of trend going in, like this direction, and then start that entry point. But, I'm happy with this because you know, that small loss was propelled by massive amounts of growth, right? So, off this trade, we lost like $200, I believe, which kind of may seem, bad. And yeah, $214 we lost off this. But, within a couple of days, we took a trade on RYAN, Netflix, MasterCard were at $1,500, GNRC 700, and ENB up, 800, VU almost $1,000. So the small loss, I went back and I reviewed it. I kind of wanted to show you guys what I did. So now I know most of these plays we got in on either a couple of things. We got in on more confirmation, which was good, other than VU here. So let's talk about the positions that we're in on. So we're in on VU, which is the Vanguard S&P 500. Now, one of the main reasons I got in on this thing was because just look at this, okay? We're on the hourly time frame, so each candlestick represents 1 hour of trading, okay? Where is the support zone? Right in here. You guys can see that each and every time it hits this zone, ranging from 535 to 530, so this $5 window, each and every time it hits it, we get these natural tendencies of getting great buying pressure. So recently, we had this huge sell-off where the S&P, or VU, sold off from 550 all the way to 528. And this was a massive for sale sign for me. We got in near and around, I believe, the 533 mark. We can pull up our right here. So our average cost on VU here is going to be right here, 529. So we got in almost on the lowest of the low, which is unheard of. Very rare do I ever get in on the lowest price, and sell at the highest. But, when you swing trade every day, stuff like this just does happen. So now here it hit this. The thought process I had was honestly very, very simple, was to enter there and honestly just kind of keep our stop loss just kind of floating. And what I mean by floating is if we get more sell-off, right? If as we look at this here, let's go ahead and see. If we get more sell-off here down below the 529 mark, and it goes to 510, I'll buy more at 510. Like, I was very confident in this position. I could average in on this. I could wait for, breakout or whatever it may be. And this is kind of what we saw. We saw this nice trend line breakout on that daily time frame. Got in on that 90-day moving average line. Very undervalued on that RSI. The hourly time frame looked fantastic here. We are risking, let's go ahead and finish drawing this out so you guys can see. We are risking $1 to make $5.44, which is, it's exactly what you want to see. So now, with these types of trades, I could be wrong like 30% of the time and still make money off them, which is exactly what we look for. So with this one here now, we're honestly just kind of keeping our stop loss just a little bit, pretty much near and around the 557, 558 mark, right in this range. If it does dip down, I'll take my $1,000 profit off this any day of the week, right? I've never lost money taking profit. So this is a very, very simple trade just by using textbook support zones, and then the resistance up here. Anything above the 557 I'll be happy with profit with, because it's heavy resistance in there. All right, another stock here that we took a trade on was MasterCard. MasterCard was one of the stocks here that paid off very, very well. And you guys can see as we look at our our journal. And don't forget, if you guys want to get this journal, you guys can download this. I put it down below for you guys. But we're up right now $1,500 off this trade. Off this trade, $1,500. So now, why did we get in? So that question that everybody asks is, Carter, why did you buy this stock? Everybody always asks me that, and it's not just it's not just an easy answer. A lot of it, honestly, it follows my checklist. It follows my approach here. The first thing I look for is trends. I'll always make sure that the stock I'm getting in on has an upward trend, at least within the past 10 months to a year. Very rare will I go, with a 3-month or a 1-month trend. It's almost never. So after that here, we saw the stock sell off from 536 all the way down here to about $500, which is a good amount of sell off. This is billions of dollars in market cap that's just getting sold off, not because of anything bad, just because of pretty much an overvalued market. We saw a lot of the market selling off this, during this time. And for sell off, for me, I love it. I love sell off. I've made more money during sell off, rebounds than just a standard bull market. So now I saw this thing sell off down to this blue line. This blue line is what we call the 90-day moving average line. This line acts as trend indication, so you can see the general direction of the stock. But more importantly, it acts as support and resistance. In the past, as we look at it, you guys can see that it's hit that blue line, but it's not like 100% certain, but it does hit it and we get buying pressure. That's kind of what we want to see, is at least a couple of times of getting, some buying pressure on that blue line, just because now it could represent a support line. So after we establish that, the next thing is looking at that RSI, which stands for the Relative Strength Index. So, at the time it was trading for a 33. The last time it was trading for a 33 was back in about here. And what happened? We saw the stock go from 428 all the way up to about 472, which was a really good move. So now looking at this, what do we have? We have a stock on an upward trend, sold off down to support line, which is the 90-day moving average line. It's undervalued on the RSI. But you don't want to get in on this position and just have it continue to sell off and off and off and off. What do we look for? We look for breakouts, and this is exactly what we saw. So as we remove these moving average lines, what do we have? We have this general downward trend line and this really nice breakout right here. Now, our average cost with this position was extremely low because I had a very similar approach like I did with VU, where if it sells off more, I'll just buy more because I have the account size and the capital to do so. But then here, as the stock broke up, this would have been the best entry point for like beginners, novice traders, or even like full-time traders. I would have easily taken another trade, but I got in lower. So stock popped up here. And now what we're watching here is the general market, or the general stock, use, instead of that 90-day moving average line, that yellow 50-day moving average line as support. So now, as the stock climbs higher and higher and higher, our stop loss is just going to be below this yellow line, which is a very simple approach, and a lot of traders do it, and I absolutely think that's the best approach, is to always keep your stop loss below a moving average line, or at least a support line, to ensure that you're going to possibly make more money. But overall, this is a very simple approach on how you guys should be swing trading, reviewing positions you lost money on, even your winning positions you got to review. You are the result of your actions, right? If you go into trading thinking it's an easy way to get rich quick, or if it's anybody can do it, no, anybody can't do it, because a lot of people don't want to review their trades. A lot of people don't want to invest into themselves, and all that stuff. So, the biggest thing, review your trades, check out our digital trading journal, check out our school. And then the last thing here, the broker I use, everybody always asks, it's Moomoo. I'll put a link to him down below. You guys can get up to 20 free stock. It's completely free to sign up. So make sure you guys do that. You won't regret it. Yeah, so hope you guys all enjoyed it. If you guys did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.